In this video, I'll be sharing with you how you can navigate your time frame, how to do effective top-down analysis. First, I'll be doing this on a plain chart. You can do this on H1, and then this analysis can be done on a H1 while you look for your entry on 15 minutes or 5 minutes, depending on what suits you. You can do it on H4 time frame, and your entry will be on a lower time frame. What I'm saying in essence is this. For instance, if I'm to do this using my naked chart, I'll be coming up this way. Here is my higher low, and a higher low. So I am in an uptrend. If I am to connect my trend line, I will be having this. This is an uptrend. So it means that my point of entry for this trade is basically this point, and this point. These are the only points I will be looking for an entry. So which means as at when price move from here to this zone and price is up here all the way to here, I have two things to do. I'll be expecting a pullback so I can find an entry for a buy. And as such, one of the way to do it, I will connect my Fibonacci to that high, because this is my range. Here and here is my range. Having connected my Fibonacci, I will look in between this level and see if I can identify imbalance, which is improper price action. If there's anywhere I can identify any improper price action, or which is a fair value gap, or a smart money cube. So here there is a smart money cube. The smart money cube I'm referring to is this bearish candle here. That is what we call smart money cube. And below it as well, there is an imbalance. There is a fair value gap. This candle here is a fair value gap. So price is yet to retest the fair value gap. So having established that, I will want price to pull down to my either 50 level, 61 level, anything from 50 to 100. I'll be finding my entry. And as you can see, price pull back to 50. So immediately price is around the 50 zone, I will move to my lower time frame. But that is where I'm expected to find entry. You can see that this price tapped into the smart money cube. You can see it here. If I am to use this same H1, when price tapped into this smart money cube and give me this bullish engulfing candle, with this follow up, I will be in my trade and my stop loss will be here. Otherwise, I will have to wait. And here I have a W sharp pattern. If I want to use sharp pattern, I will use this to buy. If I want to use a break of structure, I will connect my trend line, which is this. from here to this point, and this will give me a buy. And as you can see, this is as well a bearish flag pattern. Sorry, a bullish flag pattern, which is a continuation signal for a buy. Now, how do we navigate this on a lower time frame? So what you will do is, for this move on a lower time frame, you are going to see a series of lower high, lower low, lower high, lower low, lower high, lower low. The same way you are having it on this time frame. So I will now move to my 15-minute time frame. So you can see now. So since the trend on the higher time frame is a buy trend, if I come to my lower time frame, I will only be looking for opportunity to buy. Even though price is selling on a lower time frame, I will not sell. The main sell is a buy. The main trend is a buy. So I will only be looking for opportunity to buy. So whatever sell I am seeing on a lower time frame is only a retracement. But if I know what I am doing and I am perfect, I can still sell in the retracement. And this is how I will do it. You'll realize that here now, coming to our lower time frame, price is giving us a lower high, lower low, lower high, lower low, lower high. So I can trade this based on this time frame. But it is going to be a short trade, knowing that the overall market condition is a buy. So I won't be holding any trade here for a long time. So that is just the logic I'll be using, and that will be exactly how I'll be trading it on this time frame. So we only know that whatever trade I am taking here is temporary. And I will mark, remember that for my H1, I already have a zone which I have highlighted. So even if I begin to sell from here, once price get to my level of 50 of the Fibonacci, I will exit, because from that zone I'm expecting a buying opportunity. That is number one. And then secondly, because I am having this reversal pattern, smart money cube, I know that there is a tendency for this smart money cube to revise price, and also the fair value gap to revise price. So even if I am taking any entry from this time frame, once I get to that time frame, I will change and exit my trade. So regardless of the trade, so you can choose to be taking a short sell. Price break out of this, I'll have my entry. Then another entry, you can still put your Fibonacci from here to here. Okay, this is what I know. You can still put your Fibonacci from here to here. And you can see that here price pull back to 78 zone, and then you have a sell. So, but everything you are doing here is temporary. So immediately price break out of this zone, you will go in for your buy, knowing too well that the higher time frame is a buy. So, and since it's a buy, for price to continue to buy, you will have one of these signals. You will have a break of structure on a lower time frame. And here is a lower high. Here is a lower low. So from this point, we have a break of structure. And in this break of structure that happened here, that break this high, price as well have a trend line. So price break this trend line and retest it and it move to the upside. So this is how you can navigate this simple strategy. Okay? And so since price has break that level, we are now following our normal trend, which is a buy trend. And you can see after that level, price has been buying. The price is still buying. So that is how simple you can navigate your time frame. Okay? So we have this second leg formation. And this second leg formation is from here. So we'll put our Fibonacci, we want to see price pullback. And in this pullback, you can see the price pulled back to 78.6 zone of our Fibonacci tool. And that gives us a perfect entry. So if I using a candlestick, we'll be making an entry. And otherwise, you come to our 15-minute time frame. You can see this pullback. Since the trend is a buy, a bullish trend, we will only be looking for opportunity to buy, not opportunity to sell. You can see price pull all the way to that point. You draw your reference line, your trend line, and you wait for price to break out of it. You can see here, price break out of the trend line, price retest it, and then you will be in this buy. That is if you are not making your entry based on a higher time frame. If you are making it based on a higher time frame, all you need to do is for you to wait for this candlestick formation, which is what we have here. Okay, and of course, here where you see price came, we have a fair value gap here. This is a fair value gap, and price tapped into this fair value gap. So that is just how to do the analysis. The advantage of a lower time frame is to give you early entry, and your stop loss will be small compared to when you are making your entry on a higher time frame. So this is how to find your entry using a naked chart analysis of a top down. Okay, so you will identify the trend on a higher time frame, mark your point of interest, which can either be a smart money key, a fair value gap, or an order block. Once price come to that order block, smart money key, your support and resistance, or your trend lines, all you need to do, switch to a lower time frame, and then you begin to look for your entry signal, either a chart pattern, a break or structure on a lower time frame, regardless of whatever you are using to find it. I believe you have gained value. In the subsequent video, I'll be analyzing how you can do that using indicator. We'll see you in the subsequent video.